Men lie, women lie, but the numbers don't lie. However, do they tell the whole truth? Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's episode, I would like to work through this natural tendency for us to just say, well, show me the numbers, show me the data, and I believe that has its place. We'll talk about it. I just don't believe that it's the place to start. I really like a saying that I've heard many times from James Nethery when it comes to the infinite banking concept. I think it could perhaps apply to many other subjects. But what he says is that when you understand the concepts, the details don't matter. And when you don't understand the concepts, the details don't matter. I hope you heard me on that. It bears repeating. When you don't understand the concepts, details don't matter. Okay? When you do understand the concepts, the details don't matter. I said it vice versa at that time, but I'm trying to get your attention. I'm really trying to get you to think about that when you focus on understanding, vetting, and then implementing the precepts, the principles, the concepts of what it means to become your own banker. The numbers have their place. The data has its place. But the principles, these concepts, is the place to actually start vetting, understanding, and then implementing the infinite banking concept into your life. And I would certainly say that was my experience when I was invited to see a live presentation on the infinite banking concept back in 2015. I saw some numbers. I saw some illustrative examples, okay? And I even have that now as a set step in my process with a prospective client where we will get to looking at numbers, relationships, data for sure. Early enough, okay, but not too soon. And then, of course, we will visit their particular numbers before they ever own a properly structured whole life policy with a mutual company that pays dividends, their own private entity. They will be seeing their numbers. We're going to be reviewing that policy before there's ever ownership. So what I was saying is that when I first was exposed to the idea that I could become my own banker, I gravitated towards the principles, the concepts that I could have financial independence, for example. That's not a number. Okay, folks earn high, folks earn low. Folks earn active income, folks earn passive income. So there are so many different variables on how we earn, let's say. But whatever it is that you're earning, when I was exposed to the idea that you could keep what you earned and thus build financial independence, okay, by purposefully, intentionally amassing capital that you could compound, have guarantees, you maintain control, you don't put it at risk, all types of advantages. See those concepts, all those concepts that I actually just went kind of quickly through. Those are all concepts that matter so much more than what the number is. See, because you earn what you earn, I earn what I earn. What if you could keep yours and I could keep mine? Whatever the numbers are, okay? So compound interest, for example, is it neat? And I would encourage you to do this. I've done this on the channel before. I'll say it again. If you've never gone through the thought process of, okay, this experiment of, would you rather have $1 million today or a penny that doubles every day for the next 30 days and whatever that would result in? Okay, so if you've never done that, do that. Pull out your calculator. Be wowed by the numbers because it is a wowing number that you will land at. See, the $1 million up front, it looks good for, the other person that picks a penny that doubles. It looks really good, that $1 million up front right away versus the penny that doubles over week 1, week 2, week 3. Very, very unimpressive. Okay, but in week 4, you get to over $5 million. Okay, so the relationship, the principle, the precept, that uninterrupted compound interest and what that can do, no matter what the starting number is, okay, is an amazing concept. And once you understand that concept, you can begin to apply it at whatever level you want. You could pin a number to that. Then, are you wanting to start with just doubling a penny? Would you like to double a nickel? I mean, you get to choose that, right? So all this to go back to, I understand that you and I both, I did too, wanted to get to the numbers. I can appreciate some visual aids when I'm learning something or when I'm working through something. I have notes. I'm a prolific note taker. I have journals. I will draw things out. I could be explaining something to my children. And if you're just tuning into the podcast, I'm just showing just a quick piece of plain white paper and it's horrible writing and you can't make sense of it. But I'm just saying this is on my desk, because if I'm going through something with my children or if I'm going through something with a client, I'm very likely to write something down. So the numbers have their place. Illustrations have their place. And when I say illustrations, I mean any type of a visual aid to include policy illustrations. And yet, a policy illustration is not where I start when I am vetting a client. And let me go ahead and say that I do vet clients just like you want to vet me. Hey, Jesse, are you real? Are you even a real person? I want to know who it is that I am considering coaching and mentoring and working with and working for. Right? So we go through that mutual vetting process with each other, and I'm very likely to use illustrations, very likely to use visual aids. I just don't start there necessarily, because I have personally adopted that philosophy of understanding concepts, then getting to the details. So maybe let me go back to that saying. When I said the details don't matter, I'm saying they don't matter like the concepts do. Okay, the concept of, and I'll use this again, financial independence. Whether someone makes $10 an hour or $10,000 an hour, financial independence for them is a concept that should be what the numbers are going to be based off of. So let's just put everything in its proper place. When we're onboarding a prospective client, and we're going through our process, because we have this process where we're having consultation calls. We're looking at your financial footprint. We're talking about your plans and your goals and your aspirations, how you plan on using this policy. Is this a first policy? Is this another policy that we're adding to your system of policies? And we're discussing the structure of that policy based off of, all these goals and plans that you have. And we will get to a point where we look at your numbers and we go through the numbers, but that's just not the place to start. And let me give you one big point of proof. R. Nelson Nash, after having taught and given his seminar and written the book, the book, Becoming Your Own Banker, he wrote Building Your Warehouse of Wealth as well. He's written 2 books. I highly encourage you to read both of those books. Watch his live seminar, okay? But later on, after the book had been out for some time, he did say that if he were writing the book over again, he would not have used policy illustrations again. He would have just been using, his diagrams. He wrote out diagrams. He gave visual aids to help us understand the concepts, of infinite banking, but he would not have used policy illustrations. And I understand that now. Because again, I remember what it was like to see a presentation for the first time. I got the benefit of both hearing concepts, having some visual aids, looking at some generic policy illustrations. But those numbers, I'm saying we've got to be careful about trying to apply those numbers to us, because that could, for one thing, lead to a cookie cutter approach. And I just don't believe that any one person is the same as another. And I don't believe that there should be a cookie cutter approach to implementing infinite banking in your household or your business or your investing, whatever it is that you are doing. I believe it should be for you, this entity that's being built and used, and then, of course, eventually this system. So let me go to a point here that I would like to either expose us to or refresh us on. When Nash wrote the book, Becoming Your Own Banker, he didn't start with numbers. He started with the human problems. And there are a few human problems that I'd like to remind us of right now. So number 1, Parkinson's. Now, Parkinson's law states that, well, a couple of things. One is, we tend to use the full amount of time envelope given to accomplish something. Okay. If we could accomplish it in an hour, but we're given a full day, we'll use the full day. That's just the natural human tendency. Okay. Same thing about money. We tend to spend all that we earn. That's a natural human tendency. That's a human problem to address. Well, Parkinson's law doesn't have anything to do with a number, because again, whether you're earning $10 an hour, $10,000 an hour, if you spend all that you earn, doesn't that just put you back to nothing? So it's understanding that concept of, okay, we need to actually and honestly introspect on how we spend money, what is our relationship with money, etc., to be able to address that human problem of Parkinson's law. Okay, let's go to the next one. Let's go to Willie Sutton's law. So Willie Sutton was an infamous bank robber. That's just a concept we need to be aware of, that either legally or illegally, folks would like to take our money from us. Okay, there are folks that would like to steal. So whether that is money under a mattress, whether that is in a saving or a checking account, whether that is in qualified plans, government. Okay, so that's just a concept that we need to address. Now, does that have anything to do with numbers? No, not really. No, not really. Okay. Now, if somebody steals money from you, it might matter to you whether they steal $10 or $10,000, but it's still a problem. It's still a concept that we need to address. Okay. The third, the golden rule. He who has the gold makes the rule. So this third principle from Nash, for example, shows us that, and I'll use qualified plans again here. It's a great example. And I do regularly talk with folks that are expressing their concern over market losses and volatility, or some duress, some hardship in their life that's come up, and there they are paying a 10% penalty on accessing money that they've put aside because they're breaking the rules, essentially. So the golden rule, he who has the gold makes the rules. Well, if we're locking up a good portion of our income to these qualified programs and plans, can we access it? No, not really, or not efficiently. Okay, penalties and taxes and paperwork and all these different things. He who has the gold makes the rules. I don't know what life holds for us. I want to be able to have access to capital when I need it. And at the same time, I'd like to guarantee that it's going to be there and it's not going to go down to zero, which would be... So lots of variables, okay, for us to consider. He who has the gold makes the rules, the golden rule. The next being, and Nash would call this perhaps the most dangerous, the arrival syndrome. This thinking, this mindset, this mentality of, well, I already know that. I'm already doing that. I know that already. Who was it? Was it Ray Kroc that said, if you're green, you're growing. If you're ripe, you're rotten? Warren Buffett is somebody. Okay, I'd like to give credit where credit's due. But if you've arrived, you can't learn anymore. You can't grow anymore. If you're not open-minded, how do you advance? Okay, so this is a concept that has nothing to do with numbers. And here, let me dive a little deeper on this arrival syndrome, because, see, even just this week, I'm telling you, this happens. And I get it. I've been the person that was freshly exposed to IBC. I've been the guy that implemented this for years to pay off bad debt, to be able to finance family vacations, to be able to pay recurring expenses. We've done all kinds of things with our policies as consumers. We've been practicing this concept for going on 9 years. We own 6 policies. We pay significant premiums for us. Okay, so we're doing the thing, and I get it. You get to the point where you want to see numbers, but on this concept of the arrival syndrome, you can't get to the numbers too soon, okay? Because if you've not vetted and understood and worked through the mental gymnastics, because this is a brand new paradigm, becoming your own banker, you didn't hear about this from teachers, from church, from work, from your neighbor. No. We are born into financial slavery in this conventional commercial banking system, okay? It's just what we're born into. This is a new paradigm. And if you bring this mentality of, well, I already know that, all you got to do, Jesse Durham, Mr. Agent, sir, Mr. Vending Machine, I'm going to push the buttons that I want, you give me my numbers. No. No. That vending machine approach, and that's something that's also conventional. So again, I'm hopefully I'm not being too sarcastic, too comical. This is serious. I'm not a box store guy in a box store. I'm not a vending machine, okay, where you just push the buttons, I kick this thing out. I don't do the cookie cutter approach deal, okay? And I am vetting you while you're vetting me. I'm an open book. You ask all the questions that you want to see if we're going to be a good match to help each other, moving you forward and becoming your own banker, right? But part of that is me vetting you also. So I'm looking for folks that are open-minded enough to learn. I really enjoy sharing my nuts and bolts experiences that I have, earned either the hard way or by learning my own mistakes. Different ways, of course. Over the past several years, you don't need the numbers too soon. I could show you some numbers, and I can even do my best to have those numbers reflect our conversations, our plans, what you're looking to implement. And yet, if you don't understand the concepts of this process well enough, and you're just looking at some numbers that is simply, these numbers are a snapshot of the product, do you even know what you're looking at? I know you can count. That's not what I'm saying. Do you even understand what the concepts in those numbers are implying, leading to, offering? Okay. I'm not questioning your intelligence. I am saying this is a new paradigm. This is you considering unplugging from the matrix, okay? Looking through a brand new lens of becoming your own banker at life. So would you even know what you're looking at? So it's a valid question. It really is a valid question. The numbers have their place. We just don't start with the numbers. And fighting the arrival syndrome. Now, this is Nash, not me. He said it's perhaps the most difficult of the human problems to deal with. And I'm not even putting all this on you. I have to fight the arrival syndrome. This isn't that, I got my first policy in 2016 and started paying off tens of thousands of dollars worth of debt, which we've done, and I've arrived. No. These books around me, they are, I think it's a cool visual, but it's what I want this office space in my study to look like, because I use these books. There's more than a dozen books right here just off screen that I've read, and some of them to my children. Some of them are fun books. Some of them are books on marriage and finance and business and personal growth and development and parenting and all kinds of things, because I am all of those things, right? I am a husband. I am a father. I am a businessman. So fighting the arrival syndrome off is my task as well if I want to experience growth. So I'm just trying to encourage us all to address the arrival syndrome for sure. And then the last principle, the last concept from Nash's is use it or lose it. Okay, and here's the example that I like to use. And again, does this have to do with a number? No, but kind of once you understand the concept. So let's say you take one of your arms and you tie it to your body, not to use for the next 30 days. Okay, so you're going to use one arm, not use the other. Well, let me ask you a question. At the end of 30 days, which of those arms is going to be stronger? The one left free to exercise, or the one that has been atrophy? It's so simple. It's so simple. But if we actually applied that concept to our finances, okay, it would be a stark contrast as well. So use it or lose it. You have cash flows the way that you experience cash flows. You don't start with everything, okay? And that's where numbers can play into. See, when I got my first policy, I didn't use all of my income in one policy. No. We built systematically over the course of years a system of policies. Now, we still paid significant for us premiums in that first policy. And it's my favorite policy because it's the oldest, it's the most efficient to date, of course. And we did use significant premium to get that one started. So we addressed part of our cash flows with that first policy. And then over time, we addressed more. We wanted to get more of our cash flows into a privatized banking system. So use it or lose it. It applies to your body. It applies to your money. Okay. Motion is a natural law. The sun, the earth, winds, our lungs, blood flow, so many things. Okay. So many things. So all that to say, addressing the concepts is more important than addressing the numbers. We will get to the numbers. The numbers have their place. If you're vetting this idea of becoming your own banker and you actually get into R. Nelson Nash's book, Becoming Your Own Banker, he's not going to start you off with numbers. He's going to start you off with what the problem is, what some very helpful principles are that will help us with this problem. Okay, that's the starting point. Do you get to numbers? Yes. In our onboarding process, there's a place in the process for everything. There's a place for our strategy calls. There's a place for speeding up your learning curve, education. And then there's a time for application. There's a time for a medical exam. There's a time for going through your there's a time for getting to the numbers in that process, beginning to end. And then I say end, there's no end. There's no end. I like having as close of a relationship with our clients as they would like to have, and at the same time as independent of a relationship as they would like to have. I want to be a resource. I want to share my experience. I want to add value. That's what the podcast is here for. This is just a library of my best practices, of the best questions, of great information, I think, encouragement, hopefully, on your way of becoming your own banker to get to living out and leaving a lasting legacy to those that you care about. But it starts with the concepts, not the numbers. Now, let me give you one practical, because I want you to have a practical example of the numbers and concepts, understanding their roles. So let's say someone was looking to get a mortgage and they decided, well, I want to get a 15-year mortgage and I want to pay a 20% down payment and I want to get a super low interest rate. So let's just say that's our scenario. For example, I want to point out a couple things here. So in that scenario, right off the top of my head, I'll think of about three things of where conventional thinking puts our mindset and then where becoming our own banker puts our mindset in that scenario. So number one, the down payment, 20%. When you understand capital and how compound interest works and how if you can use the same dollars to accomplish multiple jobs, you're better off. Okay. You would actually probably arrive at wanting to pay as little of a down payment as possible. Because if you just take dollars out of your cash flow and you pay a big down payment, can you do anything else with those dollars now? No, they have left your system. You can use them no more. Okay, they could have been buying your death benefit. They could have been cash value. They could have been procuring assets for you, income producing. Okay, so I'm not saying don't have a home. I have a home. I love my home. But I'm asking you to look at personal finances in a different perspective. Okay. Another would be 15 years versus 30 years. Okay. I'm front loading essentially. I'm paying quicker than I have to if 30 years is an option, and it probably is for most folks. Well, let me ask you, so let me provoke some thought here. Is there something that you could think of that you could do with half of a mortgage payment that could possibly produce positive results for you if it weren't going to a mortgage payment? It's another way of looking at things. And I know there are the folks out there that are, 15 years, big down payment, knock it out. If you want to do that, great. I'm just asking you to consider, do you want your dollars to perform multiple jobs? Okay, that's just one question to ask. And then the other would be the interest rate. While everyone is getting, and this is maybe the one I would hone in on the most, while everyone is focusing on interest rates, I need a lower interest rate. I want to get locked in at this interest rate. Okay, paying a lower interest rate is better than paying a high one. I'm with you. But what folks miss when it comes to looking at a mortgage, for example, and there are other things as well, cars, all kinds of stuff. But it's the volume of interest that folks are paying. That's the problem. Not the rate. It's the volume of interest. If you have a mortgage, I dare you to do this. I dare you to do this. Look at your mortgage rate and ask yourself a couple of questions. Or look at your mortgage statement and ask yourself a couple of questions. Number one, how long have I been in the house? And if every 5 to 7 years I'm going to move, I mean, that's pretty close to the average. What's going to happen? Well, I'm going to be paying the biggest amount of interest perpetually. Over and over and over again. I'm going to be restarting. Because when you look at your payment, the second thing I want you to look at is look at how much goes to principal and look at how much goes to interest. The average American is bleeding out interest dollars for the things that we finance. Bleeding out interest dollars. Okay? So just a couple of thoughts there. So there, I could be showing you the numbers. Here's what I'm saying. You could be shown the numbers. Okay, 15 years, 20% down payment. 30 years, 5% down payment, all these different things. But if you don't understand that last part of volume versus rate, that concept of volume versus rate, it's not rate that's so important. It's the volume of interest that we're bleeding out. That concept is so much more important than the numbers. And then that other of folks naturally tending to move every 5 to 7 years, and then that creates passive income for the banks out there where we're paying the greatest amount of interest over and over and over again. See those concepts, that's what's so important. Let me give you another example. Policy illustrations, okay? Just this week, I had somebody who hasn't watched a full presentation, has not read R. Nelson Nash's book. Okay, so it smells of the arrival syndrome is what I'm getting at here. There's a hesitation or reluctance or perhaps just a downright refusal to learn, okay, to spend time and effort on education. And this individual was saying, well, just give me some numbers to look at. Give me the numbers. Would you give me an illustration? My answer is no. That's not where I start. I'm happy to get there. I'm happy for us to have consultation calls. I'm happy to look at your goals and your plans. I'm happy to hear what you think is an appropriate amount of premium for you. I'm happy to have an educational, interactive discussion where we will get to numbers so that you can be on your way to becoming your own banker. I mean, that's what I do. But I'm not going to start there. And for lots of reasons. Because we should be vetting each other. That's one. Might not be a good match, might be a great match if you're open-minded to learning. And I don't know it all. I don't know it all. But if I could take 5 years off of your learning curve, that would be great, wouldn't it? Okay. And then furthermore, if I gave you the numbers, are you going to understand the concepts that are behind that page or those pages? Now, real tactical right here. Please pay close attention to this. If you are vetting the infinite banking concept and you go to someone, you're shopping around, you go to someone and they are the type of individual that's willing to give you some numerical information at whatever point in their process. I don't mean this disparagingly. I'm simply saying that if you're getting it, and it'll say it on the paperwork, it will say it on the paperwork. If you're looking at a page or some pages, it will tell you that this is not valid if you're not looking at the full contract. Okay? Not valid. Okay. That's important to know. The illustration will not be valid if it's not in its entirety. Okay? So you just simply may not know how to read one. Okay? And that's a part in my process where when folks are approved for their policy, we're going to go through that policy together. You're going to understand your responsibilities, your guarantees. You're going to understand it, okay? I'm not saying you're going to know everything. I didn't know everything when I owned my first policy. I just knew enough to know that, hey, this is everything that they said it was that I'd learned so far. It's like I did pay my premium. I did make a policy loan. We did pay off some bad debt. We do have this private monetary system now. It's amazing. Another example, and I'll tell you this happens to folks even in my process, okay? Because this is a new way of doing things. Sometimes folks will get lost in looking at a policy illustration. Let's say they're just looking at the guaranteed values and they're not looking at the information that includes the paid up additions rider, let's say. And they might be looking at the cash values of just the guaranteed part, the base whole life policy itself, and they see in year 1 0 cash value, year 2 0 cash, and they're saying, well, this isn't what we talked. You don't know to look at the whole contract. You don't know to look at the entirety of that policy. You're just looking at one page, and it's only showing you that given information. Okay, it's normal for a policy illustration to show you the same numbers essentially, but in several different ways. Okay, so you're looking at the whole policy itself from different angles, which is very helpful, but you got to understand what you're looking at. So you might see that one page that does show a $0 amount in cash value, but it's only talking about the base, and then that's where the Dave Ramsey or whoever's jumping out in your mind saying, see, there's no cash value. That's not right. That's not right. You got to be looking at the whole contract is what I'm saying. So another aspect, and I know I'm just giving these to you, but again, these are things that I've thought about in my own process as a consumer over the years, and the things that I confront as a professional in coaching and mentoring other folks that are implementing the infinite banking concept or vetting it. Here's another thing you need to recognize about a policy illustration. When I or anyone gives you a policy illustration, when you do understand the concepts, you're going to understand that that is just that, an illustration. Okay? So what I mean by that is, does my policy that I got in 2016 look like the illustration that I got back then? Nope, not even close. Not even close. And think about it. Do we know that you're going to pay premiums the way it's illustrated from the time that you're looking at an illustration? No. Do we know that you'll pay less, more? No, we don't know that. Okay. What are the dividends going to look like? We don't know that. So there's so many things that you just got to recognize that illustration is just that. It is an illustration. It is helpful for those of us that do like to see some numbers, that do like to see some visuals. But it's so much more important how you use the policy. And the example that I normally give there is this. Think about it like this. If you and I both get a car, brand new, right off the assembly line, same make, same model, same color, same everything, and we say, hey, let's get back together, touch base 5 years from now. 1 year from now, it doesn't matter. But if you take great care of your car, the maintenance and all those things, change the oil, rotate the tires, and I dog my car over the next year or 5 years or whatever, and we show back up, we started off the same. Okay, just like that policy illustration, you have an idea. Okay, but we used those cars so very differently. Okay, and we're going to have different results because of that. So when it comes to this mindset of, well, just show me the numbers, I'm going to encourage you that has its place. But an illustration is not going to show you, it's not going to express the concepts of control. It's not going to express the concepts of self-collateralization. It's not going to express the concepts of mitigating risk. It's not going to express the concepts of hedging against inflation, perhaps having some litigation protection, being able to operate in a known interest environment, being able to have tax-free access to a compounding pool of capital. It's not going to be able to express that if you don't understand the concepts well. So here's where I'm going to encourage everybody, once again, when you know what's going on, you'll know what to do. When you know what's going on, you'll know what to do. So I hope that this has been helpful to you. If you'd like to have a conversation about how to implement the infinite banking concept into your household or your business or your investing, we've got a free presentation and my calendar link all on our website, durhamtalents.com. This has been a great pleasure for me. I look forward to our next conversation. Have a great day. Take care.